late yesterday, we had this report that China was asking some of the funds to do what?
Yeah, so our colleagues had the scoop saying that Chinese regulators, through window guidance, are asking several of the country's major mutual fund houses to refrain from selling more equities than they buy for a day. I feel like this is a clear sign that the authorities are very aware of how disheartening the market has been, not only for foreign investors but also for the country's large number of retail investors, and consider how they want the wealth effect from equities market to help boost consumption. But I think the bigger question here is that do they have effective tools to boost the market? And I feel it looks like it doesn't, because if we're just looking at asking mutual fund houses to refrain from selling equities, they've done that before. And if we look at history, they did it in September last year and it wasn't that helpful. And we also had scoop earlier this week talking about how they're considering cutting stamp duty cuts. And also we have another state media coming out saying that more analysts are calling for that. But even for stamp duty cuts, if we look at 2007 and 2008 when they have adjusted the rates, it was able to boost market for a few days, but it just doesn't change the longer trend.